Hello everyone, this is Okane here, and today we're going to talk more about expiries. I know I have covered how I select my expiries for short-term trading in previous videos, so please check them out if you haven't seen them. Because in this video I'm going to talk in general about expiries, and this is for the beginners who are yet not familiar with what expiries are or how to select the proper expiry for their binary options trade. So check my previous video out if you are already an advanced trader and you want to know how I select my short-term expiries. And first things first, let's start with this article on binaryoptions.stock.com. As you can see, there are several expiries like 60 seconds, 1 hour, 30 minutes, and higher or even lower nowadays with the 30-second expiries. So first thing you have to do besides picking the direction of the trade is an expiry. Why? Because the expiry is going to be the deciding factor of whether your trade is going to lose or win. So simply picking up the direction of the trade of the asset is not enough in binary options. You have to give it a time. Is it going to be a 10-minute trade, a 15-minute trade? Which expiry is going to be enough for your trade to finish in the money? And you can read this article and understand what affects your expiry choice and how to understand the charts and time frames. And let me bring up this picture about what affects the expiry. How do you choose the expiry? So these are the expiries dependent on your entry, your previous history on the chart, and the trend itself. This is my opinion, of course, and I will show you in a moment what I mean. So obviously, before you can understand those things, you have to know your charts. And okay, so we have MetaTrader 4 here, and the first thing I want to mention, the first thing you have to understand is what a time frame is. If you don't know what a time frame is, it's what the candlesticks represent in a chart. So up here you have 1 minute, 5 minute, 15, and so on all the way up to the monthly charts. So each chart, if you select the 5-minute chart, in this case this chart here is a 5-minute chart, you will see that each candle is made of 5 minutes. So each candle is 5 minutes long. Okay, so each of these candlesticks are 5 minutes long. But if we go to an hourly chart, in this case, we have an hourly chart. So each candle here is 1 hour long. Okay, so these candles represent 1 hour, each of them. If you go to the daily charts, then obviously each candle represents 1 trading day. Okay, so now that you know what time frames are, let's take a look at our picture again. Alright, we said that the first thing that that your expiry depends on is your entry. So what does that mean? That means when you execute the trade. So if you look at the hourly time frame in this case, and we talk about long-term trading, for example, several hours in this case, because we're looking at an hourly chart. Okay, remember the time frame is hourly, and we said that each candle represents 1 hour. So in this case, we want to do longer expiries, since we take our signals from a time frame that represents hourly candles. We want to take longer expiries, like at least an hour and above. So what traders do, they simply wait. For example, I've drawn a trend line here. I would wait for price to come up here, and then I will wait for a signal, which in this case would be represented by a candle closing in my direction, so I can take a put option in the direction of the trend. And what did I show you in the picture? The trend is also a factor that will help you understand which expiry is suitable for your trade, as well as previous history. And we can see here previous history. Well, obviously the price is going down, and you can see that for example, if you would have wanted to execute here, you would look at previous history. You see when price came up to the trend line, You could count the candles. So this is how traders do. They count the candlesticks. 1, 2, 3, 4, 5, 6, and they would say that okay, about 6 hours is safe. So you would do the same thing again. You would wait for one candle to close in your favor, and then 1, 2, 3, 4, 5, 6 candle expiry for a put option. So this is how it works. So one more time. Our entry, previous history, and the trend. So in this case, everything agreed, and we could select a 4-hour, 5-hour, 6-hour expiry that would have been safe. But if we are trading shorter expiries, in my opinion, and as I said in the video I made about expiries, I told you that I would like to have my entries at the point where the trend line or the support or resistance line is, because I want to have more leverage. Okay, so for example, let's look at the history here. So again, we can see the history every time the price touches our line. We could count the candles, 1, 2, 3, 4, 5, 6, 7. Okay, it's gone up. We can say in average 3 candles, because if we look back 1, 2, 3, the first time 1, 2. So on average about 3 candles. So we would know that okay, when price touches our line, we could enter. Or if your strategy is to wait for candles to close in the direction you want, in this case a call option, so you would wait for the candle to close up, then you would have to give it more time, because if you had, for example in this case, if you had waited for this candle to close here and then only give it a 5-minute trade, it would have gone against you and you would have lost this trade. So that's why if you want to do short expiries, you have to enter at the touch. That's my opinion. And if you want to do longer expiries, you could wait for a candle to close in your direction, confirm your trade, and then you can count the previous candles and see what expiry suits this trade the best. So that's how you do it, long term and short term. Look at the time frame you trade. Is it hourly? Is it 5-minute? And what do you want to trade? I mean, what expiry do you want to trade? Do you want to do hourly and above, 15 minutes, 5 minutes? And if you want to do very short term, as I said, you want to enter and have as much leverage as possible. So keep that in mind. I can show you an example here of what I mean. For example, on this 5-minute time frame, I have a resistance line here. Now let's say you, at this touch, once it's confirmed, at this touch you would have wanted to enter. Now if you would have done as long-term traders do and waited for a 5-minute candle to close down so that you could start a put option, now if you would have taken a 15-minute expiry here, you would have lost, because it went right against you at the entry, at your entry, 5, 10, 15, and it would have expired many pips above your entry. But if you would have entered at the touch, as I mentioned, you would have won your 15-minute trade. So taking short expiries is risky, and you want to have as much leverage as possible. That's the moral of the story. And of course, you have to check with your own with your own strategy and see your indicators, your strategies. So in this case, I only use price action, trendline analysis, and that's for the more advanced traders. So there are some things that also affect your expiry. But before we move on to that, I want to mention different expiries that come with different broker platforms. And those are the fixed and non-fixed expiry times. If you select a fixed expiry, you will have the exact every second of that duration. For example, if you select a 5-minute trade, it will be 5 times 60 seconds, so exactly 300 seconds. So the duration will be exactly that 5-minute that you have selected. But if you're trading on a platform where only non-fixed expiries are available, then you will select the end time of your trade, not the duration itself. I mean, in a way you are selecting the duration as well, but you set the end time of your trade. Instead of choosing to trade 10 minutes or 15 minutes, you choose when it expires. For example, if the time is 10:07 and you select your expiry 10:30, then that's going to give you a duration of 23 minutes on your trade. But with a fixed expiry, if you select 15 minutes, you're going to get exactly 15 minutes. So most brokers do offer both non-fixed and fixed expiry. Some brokers only let you select fixed expiries for the short time frames, like 30 seconds, 60 seconds, 2 minutes, 3 minutes, 5 minutes, but then after that you're gonna have to choose the non-fixed expiries. I prefer the non-fixed expiries. I don't like the short-term fixed expiries. Some people prefer them. So you have to keep that in mind when you select a broker, which expiry is gonna suit your trading style. And as I said, what is going to affect your expiry? Now, I told you that the expiry is dependent on these, but what is going to affect these things? So that's obviously the fundamentals, the news. If you don't know the news, here's the article, other factors affecting expiry choices. If you're not aware which news are coming out during the day, you might get caught in a high impact news release right when you have executed your trade, and it will mess up the trade, not only the expiry, but it will also it can also mess up the direction of the trade, and it will not go in the expected direction, and your expiry won't work. So you have to keep that in mind. Is there going to be high impact news coming out? And if you don't know how to trade news, then skip that trade and wait for the news to pass over, for let it run for an hour before you enter any trades again. So what else do we have on binaryoptions.com.com? We have this article here about expiry. So if you don't know how to start, where to begin, come here, and you can see we have categorized a lot of expiries. For example, 60 seconds up to 5 minutes. We have 10 minutes up to 30 minutes. So each of these links is a strategy. And you can see here our index N stands for newbie friendly, advanced, and experts. So for example, you can see if we would select one, and you can see that, okay, we don't think that this one is approved, and you can read and understand why. And then you can go to another expiry. For example, in this case you have two strategies created by me. One is for advanced traders, the other one is for beginners, and you can click it and you can read the article and see the picture, see how it's how you can use it, and all the way up to daily strategies for long-term traders, for those who love long-term. So also visit our CommuniTraders forum. You can see several threads here based on the strategies and their expiries. So you can click it, for example, 1 to 4 hours, and we have them all categorized here. So a lot of other strategies, and we post about them. So if you have any questions about the strategy you have found, you can go to the respective forum thread and you can discuss it here, and you can ask questions or simply give us some feedback. Did the strategy work for you, or do you have any problems? So that's how it works. Read these two articles. I will post them in the description here below the video, so check it out. And also please remember to subscribe to our YouTube channel, as we do weekly live sessions and we touch on different subjects. For example, already today I will talk about a tool in MetaTrader. So tune in subscribe and tune in at any time, and also join our Skype group if you wish. It's totally free. So if you have any questions, I can meet you there and answer you either in the forums or in the live session later. So thanks for watching. Bye.